Hi, and we are back. Thanks for tuning in. This segment is our final segment on the last installment of Buying Property, the Q&A on Buying Property. And with me again is James Ong. He is the director of Fortis FP Consultancy. This week we are going to talk about insurance of your property. But James here, he's not an insurance agent. He's a financial consultant. So let's just hit the first question, James. Who needs property insurance?
Thank you, Lina. Nice to see you again. Property insurance is basically a so-called protection.
Okay.
You buy insurance on a property just in case your property is damaged or you lose your property, whatever it is. So insurance actually allows you to replace the property. That's the reason why we buy insurance for property.
Okay, but it is a compulsory thing to have a property insurance, right?
Especially property, yes. Property you should actually, because property is not a small amount of money. So properties, we have to protect the property as an asset. You buy insurance to protect the property. Yeah.
So I know one insurance property that would protect you from incidents of fire, right? But is there more types of insurance there is for property insurance?
Lina, in general, I just give you a general basic outline. Normally I advise people, I tell them there are three types of insurance for properties. Number one is fire insurance. Fire insurance is the most basic. Anything to do with fire and lightning, you're covered. That's the first type of insurance. The second type is what we call the homeowner's insurance. Homeowner, basically you own the property. And this insurance normally people will buy because number one, in case something is damaged to the property or in case something happened to the property and they lose the ability to collect rent. So homeowner basically covers everything related to the property, a bit more than just fire insurance. And the third one is actually householders insurance. Householder, as the word holder, means people who actually stays inside the house. So these are the people will be tenants. So some tenants, what they do is when they rent the property, they have a lot of furniture, their personal belongings, jewelry, whatever it is. So what they do is, other than the insurance that has already been purchased by the homeowner, the householder will actually buy an insurance to protect all their valuable things inside. So in case anything is like there's a break-in, burglary or whatever, they can actually claim this insurance to replace whatever they have lost inside their home. Okay,
James, now we know the types of insurance there is for a property. If I were to be a first-time house buyer, how do I arrange for my first coverage?
When you are a first-time house buyer, let's say you buy a new property, in most cases, the developer will have bought a basic insurance to cover property.
That would be the fire.
Yeah, the fire insurance. So if you are buying from a house from another person, the bank will insist for insurance, so it can never run away. So this is the most important part of the property protection. So the insurance company will have taken care, been paid by the developer. The developer could have bought for everybody as a group policy, especially in condominium, and charge it to you. Then they will give you actually a copy of the fire insurance policy to actually cover your property that you have been insured.
Would there be any instances that the bank pay for your insurance and you pay the bank back? Would that include in your loan or mortgage for the house?
Nowadays, banks are very creative, not like 20 years ago. Because banks are competitive now, so they're able to put a lot of things inside, like free moving costs, this is covered. So certain banks, like back to my previous episode, we talked about it, previous segment, sometimes you ask you what has been covered by the bank, part of the financing. Yes, you are right. Some banks do actually put it as part of the package in financing for the property they are actually given you as a loan.
This would be the most frequently asked question, okay? So what are the do's and don'ts?
The do's first. For the first do is to make sure you cover all the basic. You make sure whatever you need to cover of the property must be covered. That's number one. Number two, if you're buying a householder's insurance, you make sure you must have all the items in the inventory list to be listed out, so you do not miss any of those things that you actually need to cover for your insurance. The last and most important of all is to make sure you get a good insurance company. In this case, it's a general insurer. So I will advise people to actually find out at least from 2 insurance companies. Call them up, get them to send people to come and have, see you and see the property. Ask them to recommend for you. After you get a proposal, you compare them and make a decision on it. If you don't, you just ask more questions until you're very happy and satisfied before you embark on the payment of a coverage of your property insurance.
So what are among the don'ts?
Don'ts, yeah. On the don'ts, Number one, do not under-insure.
Okay.
A lot of people thought maybe, I want to save some premium. But at the end of the day is that if you under-insure, if anything happened to your property, you may get back the money, but you may not have the full property because you're under-insured.
Okay.
The insurance company only pay the amount that you're insured. That's number one. Number two, a lot of people also realize that when they buy insurance, they don't actually know what they're getting into. They just buy the insurance, then they don't know. Then when they look at the policy, they realize, how come this is not covered? So they must be well aware of this area where whatever insurance they buy, they must be aware that these are the things that is covered by the insurance.
When you say to not be underinsured, would that be possible? Because you do sit down with an agent and discuss the value of your house and the value of your insurance, correct?
Which is possible.
Okay.
In any asset that people buy, whether it's a car, sometimes people thought maybe, because insurance premium is actually quite a lot. So sometimes people want to save a little bit. That is the reason why every year I advise most of my clients to actually do a valuation of the property and adjust the coverage. Because property do go up and down. So the third thing not to do is, number one, is do not lapse your insurance coverage.
Okay.
So just maybe 1 month before the insurance is about to expire, have a look at the property, get a valuation. So if you find that the property that you are owning now has increased in price value, let's say in the central of Kuala Lumpur, whatever, then what you do is you basically buy a new or renew the policy to actually protect the new value of your property. So at least in case anything happens, you actually get back a replacement cost that can actually give you the property at the current market price.
Okay.
Yeah, it's called.
Would there be any rule of thumb on how much one should budget for the property insurance, so that at the end of the day that they would be able or they can afford to pay the house insurance?
In property insurance, to buy a property, the cost is basically fixed.
Okay.
You cannot say I want to cover 50% of the property none. So insurance rates are always there.
All right.
So that's the reason we say when you go and shop for actually insurance for a property, you get the best deal. You cover all those basic. And there's, like I said, never under-insure. So you get the best deal, you save money. If other things are thrown in, just take it.
Okay, so thank you so much, James.
Thanks, Lina, again.
Okay, we have covered all 4 topics on buying property. Next week would be on selling property, all you need to know. So see you again next week on In Realty.